When I first discovered the stock market, it was love at first sight. I spent the last 3 years studying everything I could get my hands on as far as economics and trade strategy goes. It became my dream to be a professional day trader. I put together a little bit of money in order to make that happen. You can see that balance over here. This is where we started the week out. But unfortunately, if I want to make it as a professional trader, that balance is going to have to get much bigger. Question is, how much bigger? Well, given that minimum wage is roughly $15 an hour, take that wage 40 hours a week, 52 weeks a year, and you get yourself a salary of $31,200 a year. This means in order for me to make it as a trader, at the minimum I have to beat that number right there. Well, you don't have the same number of working days as you do trading days, or you don't have the same number of trading days as you do working days every year. So we take that number and divide it by 252 trading days a year, and that means I need to generate about $125 a day in profit. I'm Russell, and this is my journal entry for Friday, October 4th, 2022. So coming into today, I had a really good plan set up, and as far as I was concerned, everything was really going my way. We came in, I put my put position on, my short position on yesterday, just before the close of business. I figured that through the pre-market, they would run the numbers up and that it would crash into the open. Now, I don't have the pre-market numbers on the chart behind me here. Needless to say, for about 1 minute, I was correct. We came up. I woke up this morning, pre-market. S&P was up around 300 and almost 37.5, I believe, was where it's at. SPY was sitting in around $376. And of course, right as the or the non-farm payroll numbers came out, we tanked from there all the way down to 369. And I thought for a moment I had it. Then it rebounded. And we actually opened the day very, very high. As you can see here from the chart behind me, I need to move over this side. We got way up here, moved all the way up just shy of 379, and then immediately sold off. As I woke up, as I got into this, this is where my psychology really broke. Okay, it broke me. Honestly, I couldn't trade after this, and I needed to stop trading until I figured out what was going on in my own head. So you can see here, there's two things that really add insult to injury here. One, we rallied up, and then we began to pull back. Okay, that's the first thing that you'll see. Okay, and then what happened here is there found to be some follow through all the way back down to the 370 level. This doesn't compute. Why they would waste our time, why they would waste a bunch of money with this, really, it confounds me. It absolutely confounds me. If you're going to rally off of the non-farm payroll numbers, then rally, right? What in the hell are you doing? Why are you pushing this up just to bring it back, and then, oh yeah, just to push it up again? Again, it really, like, I listen, all's fair. It's to me, it is fair, okay? The market came up and it ran off of the non-farm payroll numbers. Let me talk about those a little bit. Non-farm payroll came in, we created 265,000 jobs in October. A lot of great jobs created. Fantastic. And maybe they're not great. Who cares? They were created. Okay? So then, though, the unemployment number, which was estimated to come in at 3.5, came in at 3.7. 0.2% higher than expected. Okay? Now, this makes sense. I get it. If you're looking to sort of figure out where the beginning of the end for inflation is, I get that. Like, if you want to come in and buy that, because you think this is the beginning of the end. I'm going to start sizing. Like, I get it. It's all fair to me that you would run up on this. That it's fair. I was wrong. I admit I'm wrong. I'm fine. But then this pullback that happened messed with my head really bad. Really bad. When this happened, I was done. And this is when you know your psychology is messed up. Stop trying to trade. And that's basically what I did for the rest of the day. I considered a long position back here, and even there where I was like, well, it's an inside candle right on the 30-minute chart. There's a pretty good chance you're going to get a bounce off of that. Fair enough. But I was like, but there's no point. All I'm going to do with my psychology messed up the way it is sit here and I will cut this trade. If it's going up, I will cut a trade too early on a call. I'm better off to just sit back, let the move happen, let everything process, and figure out what to do over the weekend so we can come back in to next week and start over. Now, there's a couple other things that I didn't really consider, okay, when I placed this trade, and something I didn't think about. We get CPI data next Thursday, a week from yet. You get 6 days till CPI data, okay? So the idea that this market is going to capitulate before you get CPI data is stupid. And the second thing that I realize kind of now is that I don't know why I was trying to play chicken with the VIX. If you remember from yesterday's show, I talked about how the VIX was at, it was red. The same day SPY was red. Normally, within the next 2 trading sessions, you're going to get some type of a rally or SPY with an update. That's pretty standard market behavior. So I don't know what made me think I could play chicken with the VIX, but I did that. And it was wrong. And it was frustrating. And like I said, my big thing is I'm fine being wrong. That like pull back to here, continue on in the upward motion, I can handle that. But this sell all the way back, this whole round trip thing that it did, it goes up, down, and then up. I don't even know what to do with that, right? And to be honest with you, if you're a trend trader, right, now you can be a counter trend trader and all of this is like good for you. And there was a year in my life where this would have been, I would have been having one very green day, right? But I'm looking to catch sort of a trend, and not catching that trend really kind of messed with me. So again, pardon me while I'm venting, don't. Honestly, this is the Russel Journal. This is my journal. This is where I get to do that. So anyway, so here we are. What do we do? What's going to happen? Well, we'll need to go to the daily chart and sort of put it all together. Well, on Sunday we will go over the weekly chart, but here's what's probably going to happen. Okay? So, you are still in a position of no trend. You have, and if today is any count, you're officially in a bear trend. You have lower highs and lower lows. Okay? So you're still technically looking to get short this market. The thing is, you got CPI coming up. The market doesn't really know what it wants to do. So, see these 2 lines right here? See this dotted line right there? That's the 18-day moving average, okay? Chances are more than likely what is going to happen is you're just going to drift around in this range for most of next week. Until Thursday of next week when CPI comes out. Now, I will tell you, there's also 2 sort of schools of thought going on into next week. First one, you will see the support and resistance traders will look at this and go, oh, well, it never made it back up here, and so we got a rejection, and it's going to go down. Possibly. The other side of it will say, oh, it held support there at 370. We should be going back up. Honestly, at this point, 370 is your line in the sand. You get a meaningful break below that, and you're headed back down to 359. Get a break above 380, and you're probably going back up. And again, probably to that monthly. You'll actually go to the monthly 18, which is right around 417 as far as that goes. The truth of the matter is the direction of this market can at this point only really be decided by CPI and unemployment. Okay? So that's kind of where you are. If we go, can I get my stochastic? Do I have my slow stochastic up? I can't even see it. Okay. SPY. No trend. Bias is still is neutral. Okay? You have a neutral bias. You don't have a direction one way or the other. You have momentum is still pointed down. Okay? So momentum's down. It's really, you can't do anything with this. At the very least, if you got some money, which we're running out of very quickly in this channel, you can straddle this. Into CPI, you could probably take on some sort of straddle right here off of the 375, and whichever way it breaks, it'll probably save you. And that's probably what I'll try and set up next week. I'm still holding my call for Friday. The idea that we're going to make it to 400 by Friday, I don't think so. I don't think it'll do that. And on top of that, the gamma or the theta destruction on it's probably never going to come back. So I don't know. I mean, it's paid for. There's no reason to dump it. I'm not going to make enough money on it. I mean, it's $20. So $20 I could maybe make something back on the call position. At this point, though, it's time to sort of look for we're going to have to make catch some sort of real move as far as that goes. So anyway, that's kind of what I'm looking at. That's what I feel for today. That's what I've been through today. Again, really no decisions can be made until CPI. If I'm smart, I wouldn't even hold anything through CPI aside from that one call that's already paid for. And, that's kind of what I'm thinking. I'll have probably a better idea as to what I want to do going into Monday on Sunday. So do me a favor, hit the like button, subscribe, click that little notification bell, all of that stuff. Because on Sunday's show, I'll have a little bit better idea as to what to do and how to repair things. So, and, that's kind of where it is. So, anyway, the Russel Journal is written, edited, hosted by me, Russell Liss. We're produced by Social Media Shows. Our executive producer is Maria Pereza. So big thanks to those guys for helping make this magic happen. And until Sunday, pretend I said some type of catchphrase.